The second video and podcast about purchasing and the steps to purchasing a home.
But first, let's hit it. Hi, this is Alan Victoria Pinder. Welcome to our channel
And if podcast. This is your first time in our channel and our podcast, please subscribe and also get notified when we put a new podcast and video for you.
Honestly, it calls all the time at 252-327-3357. Call and text, so please don't be shy. We love talking to you.
Therefore, in the first video, we talk about the timing and also liquid asset, what you need. Today, we wanted to talk about the credit health and something called DTI or debt to income ratio.
Okay, so maybe you have cash and that's cash is queen or king, right? So that means that you can then go buy your house and their thing. But if you are like many people and you want a mortgage in order to finance the house, then these things come into play. And if it doesn't, skip to the next video. Okay, so number one is going to be your credit health. This is going to determine a major role in what you qualify for.
Yes.
The credit score is going to tell how much you are risk averse or risk friendly to grant you a loan.
Exactly.
This is why it doesn't have to be perfect. Many people have amazing credits. They're in their 700s and they think they don't qualify for a loan, which is not true. You can have amazing credit, and then you don't have to have amazing credit. You can have good enough credit and get a home. So tips to, if you are say 500 though, then yeah, you need to improve your credit score.
Yes. But what we need is the minimum.
580, 620, or 630, depending on the type of loan that you're looking for. So
therefore, you can go as low as 580. You don't need 700 or 800.
And if you're VA, you don't need that's a whole different ball game.
Yes.
So congratulations. Okay, so the steps you can have to do if you want to improve your credit is to reduce your debt.
Yes.
Again, if you are unsure how to do it the fastest way you want to, I would talk to a lender to tell us what exactly you need to do in your unique situation, and we can tell you which lender to talk to about these things. That way you don't waste your time thinking I should pay off this one and then this one. It's better to know from a mortgage person what you need to pay off and when. So pay it off in a big way will help you prepare for a mortgage. Also, of course, if you have better credit, it means you're going to get a better interest rate, and that really matters these days. So what are they looking at? They're looking at the credit score is based on the following 5 things: payment history, amount you owe out there, the length of your credit history, 2 years, type of credit you have used, and the pursuit of new credit. Now, let's take it to the next one.
Yes, basically the next one that we talk is a debt to income ratio. Debt to income ratio basically comes from a simple formula, which is your monthly debt, that could be car payment or any credit payment, divided by your gross income, which is your monthly getting your paycheck, whatever is your income is. For example, if you have a $6,000 gross income and $2,000 amount for the debt, you have $2,000 divided by 6,000, and you get 33%. But this numbers is so important for the lender and depends on the lender and the loan type that you apply for. They definitely wanted to calculate your housing expense ratio, which it comes to the 2 different type of the DTI. The first one is front end DTI, which is basically is total monthly that you pay for your house, that including principal, interest, tax, and insurances. And for example, if your income is 6,000, again, your gross income, and your loan, all these 4 things that I said is 1,500 divided by 6,000, you have 25% debt. Therefore, it's smart to review your DTI before you apply for any type of loan.
What is back-end DTI?
And there is another called back-end DTI, which is really, in this case, the lender used this one to see that you don't go over 43%. Sometimes you can go to 50%, but you need to have a better credit to go all the way to 50%. And this number again depends on the type of the loan and your lender.
And it's going to help figure out what your maximum amount of loan it is. So we hope this video was helpful, and we
and
can't
the podcast.
and we can't wait to see you in our next little step.